Welcome back. The Wall Street Journal out with this headline today. The U.S. economy is regaining its swagger, pointing to a rebound in sentiment and strong retail sales. Joining me now to discuss is former St. Louis Fed President Jim Bullard. And Jim, it's great to have you on. I mean, I wonder if that suggests that, as Chair Powell and other Fed members are fond of saying lately, that policy is in a good place and they can kind of afford to wait and see how things develop before making any moves.
Yeah, I think that's certainly the committee's judgment, is that with the unemployment rate at something very close to the natural rate of unemployment for this economy, and inflation maybe not quite at target, but certainly much better than it was a couple of years ago, and coming down, things look pretty good from the Fed's point of view.
And so therefore, you know, the Fed is sort of saying they have the luxury of waiting and not responding to any emergencies. How do we reconcile that with, of course, the drumbeat of pressure coming from the administration to say that Powell is being remiss in not having already lowered rates?
I think that the committee does need to lower rates further. They had a campaign, a recalibration campaign, in the fall of last year, and some of those effects are coming on board right now, and they should re-engage with their recalibration campaign in this fall, probably starting in September, and that seems to be where the committee is at right now.
Yeah, it does, for sure. I mean, it's interesting because for as loud as the back and forth has been, it's not as if there seems to be that much room separating the committee and maybe where things will end up in terms of getting rates a little bit lower. And in that context, however, Treasury Secretary Bessent this morning on our air said, you know, it's time for a wholesale look at the Fed as an institution, that it essentially misplayed its policy back in the inflationary times, and therefore we need to kind of have a top to bottom review of things. Is that something that makes sense, or is that just another way of saying they'd like to kind of keep the Fed's feet to the fire?
Yeah, I think the Fed did misplay the 2021 episode, and but a lot of that was actually the Congress and the White House at that time authorizing a lot of expenditure in that March bill there in 2021, and that turned out to ignite a lot of inflation in the U.S. economy in conjunction with the low rates that the Fed had at the time. But I do think the Fed recovered with its 2022 policy, which I advocated for, a very sharp increase in the policy rate, brought down the inflation rate without a recession. So that's a huge success story for the Fed, that we were able to get rid of that level of inflation, 80s level of inflation, without a Volcker type recession. So that was a big success.
Yeah, no doubt. I mean, clearly, as you mentioned, full employment and inflation is down in 2 point something, not terribly far from target. It's hard to complain long term. Also, though, when it comes to talking about how, you know, the Fed interacting with fiscal policy did, seem to get caught off sides, is there a developed economy central bank that did better? I mean, if you just look at the inflation experience across similar economies, it wasn't notably different.
Yeah, well, the rest of the world followed the Fed, and some of the emerging markets actually moved ahead of the Fed in anticipation, and you got a pretty good response really around the world. But that was all led by the Federal Reserve, I think. That's Jim's interpretation, anyway.
Sure. No, I mean it's totally fair, and that would kind of fit a certain pattern of history. When you say that the Fed, has embarked on this recalibration process, beginning last September, they brought rates down 1 percentage point. How much farther do you think they have to fall before they get to something reasonable in terms of neutral? Because look, if we have a nominal GDP right now of 5-ish%, what are we to expect from short-term rates?
Yeah, I think, the committee says it's down at 3%. So they actually would have quite a ways to go if they really believe that. I think probably 3.5 is a better guess for where some of the committee is, maybe 3.25. So they've got some room to maneuver here. They don't want to go down too fast because they've still got a little bit of inflation to get rid of. But you'd like that inflation to come down to the lower part of the 2% range and then asymptote to 2%. That would be the ideal outcome if you could get it. Yeah. And so I think they're following what, from the central bank's point of view, is a very natural policy of trying to get to a neutral policy rate when, that's perfectly sensible if inflation's at target and the unemployment rate's at the natural rate of unemployment. That's exactly where you'd want to be.